July 1st, 2026, the bear market is on the ropes. Robinhood just went full crypto and someone hacked Google stock. Let's go. Real quick, today's sponsor is Compete Token, the gaming crypto that actually has real games behind it. Links in the description. Bitcoin just bounced off a 21-month low and the bears are already sweating. BTC kissed $58,000, its weakest print since September 2024, then rocketed back to 60 grand in a single session. Soft jobs data, cooling manufacturing prices, and Fed Chair Kevin Warsh going full quote-unquote "I done know" on July hikes were enough to shake the shorts loose. And here's the spicy part, a rare monthly TD9 buy signal just perfected, the first one since July 2022. That was the exact stretch that ended the last bear market. Long-term holders are quietly stacking while everyone screams that Bitcoin is dead. Sound familiar? Yeah, it should. Robinhood just launched its own Ethereum chain, and it's already trading tokenized Nvidia and Apple shares on chain. It's called Robinhood Chain. It's powered by Arbitrum. It plugs into BitGo, Chainlink, and Uniswap. And Robinhood is calling it AI native, meaning AI agents can trade on it directly. Welcome to the future. Hood stock popped 8% on the news and is up nearly 20% this month. Not bad for the app your college roommate used to buy Dogecoin. Meanwhile, TradFi is still emailing PDF trade confirmations. Robinhood just took Wall Street's lunch and put it in a smart contract. US spot Bitcoin ETFs just bled a record $4.5 billion in June, the worst month ever. BlackRock's IBIT alone accounted for 79% of it, roughly $3.5 billion walking straight out the door. Here's the fun bit. That outflow is more than triple what Strategy is authorized to raise in its new Bitcoin buying program. So Wall Street is dumping while the diamond hands quietly reload. Every cycle, same script. The suits panic sell the exact bottom and then buy it back at the top. Someone just inflated a tokenized Google share to 78 times its real price and walked out with $400,000. The platform was Edel Finance. The Chainlink oracles worked perfectly. The flaw was in the wrapping mechanism, the code that converts the real token into the collateral version. Attacker manipulated the conversion, borrowed against phantom collateral. Gone. Credit where it's due. Edel is eating the losses. Depositors get made whole, and they've offered the attacker a white hat deal. But let this be a reminder, tokenized stocks are brand new terrain, and hackers are treating it like an all-you-can-eat buffet. Circle stock got absolutely vaporized this week, down 18%, after Coinbase, Visa, MasterCard, and about 140 other firms announced OpenUSD. It's a new dollar stablecoin where anyone can mint tokens for free and keep the reserve yield. That is a direct shot at Circle's entire business model. CEO Jeremy Allaire shrugged it off, pointing to USDC's $73 billion market cap and quote-unquote massive scale. Analysts are calling the sell-off overdone. Maybe, but when Visa and MasterCard team up to launch a competing stablecoin, you don't shrug, you brace. Joe Lubin, Bitmine, and SharpLink just launched Ethereum Institutional, a brand new nonprofit dedicated to dragging Wall Street onto Ethereum. That's the second Ethereum nonprofit launched this week. Labs went live days ago with basically the same backers. Meanwhile, the actual Ethereum Foundation just laid off 20% of its staff and is losing leaders left and right. Read between the lines here. The old guard is out. The treasury companies are stepping in and Ethereum is getting the full corporate makeover whether Vitalik likes it or not. Wild times. The CEO of Goliath Ventures just pled guilty in a $400 million crypto Ponzi case. $400 million. Real people, real losses, and yet another quote-unquote venture fund that was actually a giant hole in the ground with a fancy logo bolted on top. Look, if a crypto fund promises guaranteed returns, has a fancy Greek name, and the founder wears a really nice suit, run. Every single time. This isn't crypto's problem. This is the con artist playbook, wearing a blockchain hat. Crédit Agricole, Europe's third largest bank by assets, just launched a euro stablecoin on Ethereum. It's called Euro XT. It's fully MiCA compliant, and there are already 20 million tokens in circulation backed by 20 million euros in reserves. First use case, subscribing to a tokenized Amundi money market fund. So a massive French bank is now minting euros on Ethereum. Remember when banks said crypto was for criminals? Now they're the ones running the printing press. About time. Tennessee just banned crypto ATMs completely as of today. That's 185 machines wiped off the map overnight. Georgia is slapping on transaction caps and refund rules. Minnesota's ban lands August 1st, and Canada is drafting a countrywide ban. And the biggest US operator, Bitcoin Depot, already filed Chapter 11 bankruptcy back in May. Look, the machines were being used to scam grandmas. That part is real, but quote-unquote ban the whole thing is peak lazy regulation. Fix the fraud, keep the on-ramp. or don't, and watch every crypto ATM in America turn into a very expensive doorstop. American Bitcoin, the Trump family-backed mining firm, just announced a 15-to-1 reverse stock split because shares hit 61 cents and are about to fall off Nasdaq entirely. The stock is down 86% on the year. Ouch! Reverse splits are the corporate equivalent of hiding a mess before your parents come over. The business didn't get better, you just made the price look bigger. Meanwhile, President Trump just disclosed over $1.2 billion in crypto income for 2025. The mining company can't catch a break, but the family sure is stacking. One more shout to Compete Token, the gaming crypto that actually ships real games. Links in the description. That's the tape. I'm out. See you tomorrow.